Record. There we go. Recording in progress. So I guess YouTube doesn't get those breakdowns, but I don't give a shit. You guys get them. All right. So I guess first of all, to learn this strategy, we'll go through a more in-depth version of what I taught yesterday and what our entries are. While I do that, I haven't like eaten anything really. So, all right. Oh, perfect. Okay, we're doing this on the 5 minutes, so this is good. So first of all, we're going to go over CCT, which is it's the most important and it's the most simple shit. It's the most simple part, but it is the most important and is the basis of every single trade I take. If you were here for yesterday's call, ICC, it's important because you just get a good understanding of the higher time frame move and the higher time frame trend. But you're not trading based off of it. You're trading based off of CCT, this strategy here, and you're just kind of watching on the higher time frames the direction of the actual basis of the chart. So this is going to be the most this right here is going to be teaching you the most important or just the most important part of our strategy that I trade every single day and why I usually or just have been profiting pretty good off of it. So this will be a buy example, and this will be a sell because we're going to go over this again. Boom, boom, boom. Forgot to ask, how's everybody's night or day doing? Forgot to ask y'all. Kind of just started this shit out of nowhere. Come on. Oop. There we go. Sweet, sweet, sweet. All right. So this will be the buy example. This will be, I'll actually make these style. We're going to change this to we'll change this as, what color should I make? I'll just make it purple. And we're going to name this bullish POI. Because your trend on these CCTs higher are bullish POIs. And there can be multiple, and that's what I'm going to get into also, because I'm showing you just a very simplified drawing, but you will see like how I'll have like multiple POIs. Like sometimes I'll have five different POIs price can tap into, and we'll get into that later. This will be green for draw on liquidity, which basically just means this is where your take profit will be set. Your take profit will always be set to where draw on liquidity is. So we'll just put money signs there because that's where you're going to make your money. All right. So every CCT starts off with an initial candle range, right? And this would be your initial candle range. Price can sometimes stay in ranges. So sometimes candles can stay in this range. Like it can wick completely out but close back inside. That doesn't count. It can pretend like it's about to make a move down like this but close back inside this range. The only thing you're looking for is for price which I'll do a little example right here. So let's take a break from that. This is a perfect example right now. See how price created this range here, right? Price never broke out of this candle's range until just now, right here, which I didn't mark the whole wick. There we go. So even this run right here, it almost looks like it closed beneath, but it's still inside of this candle's range. So price is still bullish as long as we're in this range. And we just broke out of it right here. So now this would be your new candle range. So now either if price breaks out of it, which actually this one, well, there's only, this is a 5 minute, this is what it's supposed to look like on the 1 hour. Sorry, I'm on the 5 minute time frame, but just pretend like I'm explaining this as if these are 1 hour candles, right? So since finally, let me go back to right here. So since finally price broke out of this range right here, now we have POIs, right? This candle right here broke out of this range, and we had this one right here. This wouldn't really count as a POI anymore because it already got tapped into right here. It's already like if you put a line here and you drag it across, you get stopped by this candle. So if you go on this one, this would be a valid POI because if you drag it across, we just broke through it. Same with this one right here. This would be a valid POI. So now prices are pulling back into this POI, and you'd be looking for entries on the 1 minute to take a sell going down. Since we switched from being bullish to now bearish, since we broke out of this bullish candle range. And now, if we break out of this range, and like I said before, pretend like these are 1 hour candles. If we break out of this range to the upside, that means this would be your candle. And let me break down why there can be multiple POIs. Because if this candle right here, right, closes massively like this on the 1 hour, which happens a lot. So if we have this range and we close super high out of this range, now you have this would be your first POI. Let me change this back to black so you can see it. This would be your first POI, the top of the range that the candle broke out of. This would be your first POI. You also have another untested area right here. This would be a second POI because it broke out of all of these candle ranges. Like if I have this box here, it broke out of this candle's range. If I drag it across here, broke out of this one, continue, broke out of this one. And let's say it closed like this. So that means this candle wouldn't count because it didn't close beyond this candle's wick slash range. So you would mark all your POIs that the candle closed beyond, like this. And let me give you a little tip. If this is so small like this, right? If the candle closed beyond a POI, but it's this short, like if it's this, sorry, excuse me. If it's this small, right? Like if it closed like this would look clean. But if we closed like this out of this range, I wouldn't count this usually as a POI just because the chances of it on the 1 hour creating the next candle, which let me draw just like a next candle like this. The chances of it creating just this small of a wick and then reversing are very, very small. I would like to see it tap into all these POIs. So on the 1 hour, though, you're basically just waiting for a candle to create its wick, create that pullback into any of these ranges, creating the wick into any of these ranges. Oh, I can't make it perfect. And then giving you the entry signal, which I'll teach you guys later in this video, giving you your entry signal, and then for price to just flip, and then you're targeting um where price broke out of. So let's say like this would be your draw on liquidity. So wait. Oh my goodness. I'm sorry, I gotta mute this because this dude named Bori fucking Pips, this Telegram I'm in. Holy shit, he just be fucking spamming the damn chat. Let me tell you. Like he'll fucking send mute forever, dude. Holy shit. Okay. But yeah, let me get back into that. Your draw on liquidity would be this right here. Or let's say it created, you know, this big of a wick. Your draw on liquidity would be the top of that wick of what candle broke beyond the ranges. So when you have a candle break beyond your range, let's say this is the one, you're waiting for that wick pull back into here for your entry on the 1 minute, and then you're just wanting for this candle to flip and hit your draw on liquidity. So now let me go back to the drawing because it'll make it look just more cleaner. Holy shit. So yeah, so let's say this candle broke beyond, this candle's range. And the top of the wick would be where you want to have your take profit. And let's say this candle, it opens up here, right? And it's creating its wick back down into your POI, which would be the top of the wick slash the range of the candle that this one broke out of. So it's wicking back down into that POI. You're getting your entry signal to buy, and then you're just wanting this candle to flip, hit your draw on liquidity, and that's literally it. What it'll look like is just, something like okay, wait. No, this is not what it'll look like. Because if it's this candle right here, price opens up here, it's creating a low, and then price is breaking up. Fuck, I want to make this look clean for you guys. Sorry, I gotta make the drawing a little bit smaller. So price is opening up here, creating that low on the 1 minute, and then it's breaking up, creating that high, coming back down, and then it closes here. This candle opens up, creates its low. And let's just say, it's having massive moves, creating its high, coming back down, closing right here. So you're waiting for this 1 hour the next 1 hour candle after these two close. You're waiting for price. Let's say it comes up to here. You're waiting for it to come back down into your POI, give you your entry signal, and then just target that draw on liquidity where price moved to right here. Sometimes I even hold it past this draw on liquidity. It's not smart to, but after let's because you'll enter, let's say you have your stop here, which will be below the wick that's created on this third candle. POI is here, and let's say your entry is like somewhere right here. Um, what was I getting to? Yeah, sometimes if I see prices moving so perfectly, I'll hold the trade a little longer, maybe catch a little bit more, but it's really not smart to do that. It's really not, it's the best to just target the draw on liquidity, and that's where your set take profit is. If I do this only if, which I'll break this down later, but if draw on liquidities are super close to the entry, then I'll look for London session highs and lows to target that are untested. Sorry, I see some chats. Let me look into here. Oh, okay, okay. I was making sure I didn't. Uh, miss any chats. But all right. That's the bullish example. Now let's say you have a bearish example. And then we'll get into a bullish and bearish example on um the actual 1 hour time frame. Hopefully I can take a trade with you guys today too during what is it, Asia set or not Asia session, but the 4 hour candle in futures closes in about 20 minutes. So maybe I can do an actual CCT breakdown and show y'all how this trade or how this strategy works out. So now let's say candles are breaking lower. So this would be your candle range that you want to see price to break out of. Price breaks out of it. So if price breaks out of it, your draw on liquidity would be the bottom wick of that candle um, that broke out. So this would be your draw on liquidity, and you're just waiting for price once it closes for it to pull back into this range, give you your entry, and then target that draw on liquidity. And then I'll mark this again. This will be your POI. Let me change it to black. Text, this would be your POI because this is the range that this candle broke beyond. And it's not like your POI is going to be here, 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 the body of the candle. It's always going to be the wicks. The either the top of the range if you're bullish or the bottom of the range, like the top of the wick of the range or the bottom of the range, which is the bottom of the wick. That's your POI you want to see price to pull back into. Get your entry on the 1 minute, which the candle will look like this. It won't be, it'll look like this right here. It'll be like, so imagine these are red candles. This one will be blue. And you'll see it pulling back in, and then you get your entry, candle flips, you hit your draw on liquidity, creates that low, closes here. But all you're doing is catching that small move in the market, just like that. So let's get into some real examples, and then I'll break down the entry for this. This is genuinely the most simplest thing you're going to learn today, but it is literally, like I said before, this is the most important. This is how I trade every single day. And then, once a week, I'll usually look at what I taught you guys yesterday, which is ICC. I usually look at it once a week just to get a general idea of where the market is heading. It's not like you have to be looking at what I was showing you every single day. And let me move this here. Actually, I'll leave this here for the example. And I'll show you why these are here. Which these are really not important. You guys literally do not need all these like fancy little boxes I have in place. I'll just do a breakdown during ICC, that breakdown later on why these are here, but you really do not need them. All you really need are these lines here. I just like marking these zones, but you don't need to do that. Let me see how the daily can. Sorry, I want to see how this daily candle closed. Very fucking bullish. All right. So let's go on to the 1 hour. There is not really a whole lot of setups I can really show you on the 1 hour here. Because I want like an active example. All right. Here's a perfect example. So, so let's say this right here, right? So let's say right here, this is your range. And as you like, I can do like a full, like genuine, like breakdown of it. But let's say you're it, because genuinely you're still in this side of this range here, right? From the top wick to the bottom wick, We're still in this range here. We didn't break out of it until right now. So now this right here, this new candle that broke out of this range, this would be your new candle range. So we broke out of it, and let's mark out our POIs. Since we broke out of this range here, the first um, POI that you can mark, because it broke out of a range. So this isn't like a new range that you wait for price to close out of. This was the original one. Price broke out of it. So now let's look for untested wicks. So the first one would be this one right here. That price never pulled back in, or not until right here. There would be this POI here, this untested wick, and then this one right here. So you have three POIs. This one right here wouldn't count because they already got broken through here and here. Or this candle already broke past these and these, and you never got an entry on them. But let's go down to the 1 minute. And I can actually show you guys right here. Let's do a little replay. Get rid of that. Go down to the 1 minute. So that candle that I just showed you, this one right here that broke out beyond, all these POIs, which I can make look fucking cleaner. Boom. And these look pretty good. What? So that candle right here, this one that I just showed you, closed here. So price, let's press play. Price is pulling back into these POIs. And look at this. Oh, fuck. Yeah. So your first entry here, because this pulled back all the way to here, broke back above your POI, and I'll teach you guys this later on why this is not an entry, because we look at the same thing. We're still inside of a bearish candle range on the 1 minute, which is this one right here. This is the last candle that tapped into our POI. First, it was this one. This candle right here tapped into our POI. This candle broke out of it. So this would be your new range. So price never broke beyond, like you can see that almost did here. It wicked below it, kept just consolidating in here. Broke or wicked underneath it again, but closed back inside. Did it again, closed back inside. Now he finally broke out of it here and back above all of our POIs. And why this trade would not be valid is because look at this. If this right here, like I said, it's the top of that wick that broke beyond your candle range. So this would be your draw on liquidity. This would be the draw on liquidity, which is your take profit. We'll mark this green. So this is why this is not a trade I would take, is because since this already had a deep pullback, look how bad your risk to reward would be. Because your stop always goes below the lowest point that price pulled back into. So your stop would be below right here, and your take profit would be here. So this would not be a good risk to reward, and I would not enter this trade. And look at price completely reverses, and you would have gotten just completely stopped. Would have been taken out of this trade. Even if you're trying to catch this small of a trade, you would have been stopped out completely. So now let's look at another example, but see one that actually played out. That was a failed example and why I wouldn't have taken that trade. So now, like I said, this candle right here closed beyond this range where price consolidated inside of. So now this would be your new range. Since this candle closed and the next candle after it closed beneath it, now this would be your new POI. which I'll mark it black. This would be your POI that you want to see price pull back into. And there's no other POIs because look at this one, this candle right here never closed beyond this wick. Obviously, this one won't count because price, well, one, this one already got tapped, this wick got tapped into by this candle. And none of these would count because we already used them. Or this one would count and this one would count because they already been tapped into. So now we go down to the 1 minute. We have our POI. The candle closed all the way down here. Oh, wait, no, it didn't. I have to do the replay thing again. For some reason, it always glitched, or it already glitched. Um, leave, um, replay, start new, boom. All right, now let's go down to the 1 minute. Why the fuck is it doing this? For some reason, it's not letting me do my thing. But look at this right here. Um, where did it close? Because for some reason it's not letting me like show you guys where it closed. So the candle closed right here. Oh wait, no, right here. And I can like mark it off just to show you. So the candle closed right here and see how it perfectly lines up with this candle right here. This was the candle that closed beyond the range the range I just showed you. Price, this is another example of like it not playing out. I know I just said I would show you one that did. Price never pulled back into our POI to give us an entry to short and target the draw on liquidity, which is right here. It already hit the draw on liquidity without giving us our entry. So there is no entry here, no trade. This is a very mechanical strategy. Like you're literally looking for literally three different things to enter a trade, and that's it. You're just looking for a candle to break out of a range, price to pull back into that range, get an entry signal back above that range that we pulled back into, enter and target the draw on liquidity. So now let's look for one that played out. So hopefully this is going to be like a little aha moment kind of thingy because I want to give you guys a little idea or not. I don't know what I was going to say there. Sorry, I'm still trying my best to become a good teacher, you know. Yeah, I'm starting here and obviously in the future I'll be doing more boot camps and stuff like that, more free teachings and all that. This is just my first one, so I'm trying to do the best I possibly can. Trying to find an example. I don't know why I can't find one. Oh, right here. Okay. Well, let's see if it's an actual example. So as you can see, this candle right here, this candle right here, closed outside of this range here, and technically not these ones yet. But so since this one closed beyond all these ranges, let's mark out your POIs. You have this one right here that this candle closed beyond. You have this one right here. This one wouldn't count because price already tapped into it and tapped above. So as you can see, if we draw this line, it taps into this one right here. You want to be able to draw your line or let your POI line to the left and not hit any other body of a candle or wick. You want it to go into the one that broke beyond it. So this one right here would count because if you drag it, it doesn't hit any wick, goes right to the body or to the candle that broke beyond its range. And these two, and like, look at this. This one right here wouldn't count because look at, boom. This one right here, this one already broke past it, so this one wouldn't count. And these two, when candle wicks are so close like this, Like if we like zoom up a bit, this one's kind of above this one. That doesn't matter. As long as they're really close, you can just count it as one. So let's get rid of your box because this that I was just marking off your range. Price pulled back. So you're after this 1 hour candle closed beyond these ranges, you're waiting for this next candle to pull back in to one of these ranges. It could have pulled back all the way down to here and given you entry. Instead, it just pulled back into this first one. So let's get rid of that. Go down to the 1 minute. I'm gonna have to fucking find this. Where the hell am I? Right there. There we go. This is the thing. I don't know why I'm having such a hard time trying to find you guys fucking trades. But anyway, it pulled back into your POI. And what I like to look for, or what you need to look for, is a candle to close underneath. For some reason, I keep finding examples that are not playing out. But this strategy is very precise and it works very well. But let's say the candle, let's just pretend, right? That candles did close below this POI. Let's just pretend. And let's say you have a fair value gap here and a price range for candle to break out of, which we actually don't. Let's just say we have this fair value gap here, which um which if you guys don't know what a fair value gap is, I can do like a very small breakdown. It's basically just where candles are either breaking higher or lower, doesn't matter. And let's say this candle opens up, closes here, has a little wick, which the wick size doesn't really matter. But and let's say this candle right here, a fair value gap is literally just a gap in the market, meaning massive candle, this candle never wicked up into this gap and it created this gap here in the market. And this will be an entry. This is one of my entries I use for this strategy is a fair value gap that needs to be inversed in the direction of our trend. So we have a bearish fair value gap right here. We have a bearish fair value gap. If price comes up and respects it, you know what I mean? Like let's say price came up and just respected it and kept moving price, to the downside. It kept being bearish. We want to see an inverse of this gap. So we want to see a candle open up and just break through this and close back above or close above this gap in the market and fill it. So do you guys know what that means? Like, because this, if this candle right here wicked back into like wicked all the way up here, now there's no gap. It has to be like some sort of gap like this. Like it can be like that. Like you guys following along with that? I'm just gonna assume that you guys are. But that was the bearish example. I can give you a bullish example now. Because you need a bearish fair value gap to be inverted to buy, and then you need a bullish fair value gap to be inverted to sell. So let's say price is making its move higher, creates a gap in the market. Let's say it created a little wick here, created a little wick here, wick here, wick here, wick here, and let's just say that one, well, there we go. So it created this gap right here in the market. Price was heading up. created a big gap in the market. Price never ended up filling this gap, making a wick into it or anything. Ended up just doing this. So now we're just waiting. And usually what I like is up to 6 to 7 candles. Like if candles are just consolidating, like this and not breaking through it, then it's honestly fine as long as like it only takes up to 6 to 7 candles for the price to finally break this gap, to fill it in, close below. Even these, well, yeah, because they can fill it in. Let's just say, like, just pretend like all these candles have wicks, but we finally get one to break. What's going on? Leave. What's going on here? What the fuck? Sorry, the shit's lagging. Hold on one sec. Sorry, my bad. Where did this just do? Or where did this just take me? Sorry about that. Oh my God, is it really gonna lag right fucking now? We were doing so good. Oh my God, it really just fucking, oh my goodness. Now we have to go all, okay, now we're loading. Now we're loading. Okay. Here we go. Now let me get back into what I was explaining. So if you guys haven't written that down already, we need a bullish fair value gap. So if prices are heading up, creates a bullish gap. We need that to be inverted, a price to break below that gap, and that is one of your entries for sells. Your stop would be like this, and you're just targeting the draw and liquidity of whatever it is. This is a bearish example or an entry we need. So just pretend like this is price pulling back up into your POI, gives you a gap here in the market, inverts that gap, you enter. Stop goes below the deepest point that price pulled back into, which is here. Boom, enter, sell. And then the last one was, or this is the bullish example, which I'm about to show you on the live market here, or the real market. All right. So as you can see, price was heading down into our POI, and like I said before, just pretend like these closed beneath our POI. It ended up just wicking, which is not good. You don't want to see price just wick into the POI. You want to see it completely closed underneath and then back above. Just pretend. Created this gap. As you can see, this price moved down here. This candle right here never created a wick and filled in this gap. We ended up stopping here at our POI, reversing, and then we didn't break or inverse this gap until right here. So your entry would be right here off of this candle. Your stop would be usually I give myself a little bit of breathing room. That's something you can also write down. Usually I don't just have my stop perfectly at these points because sometimes price can perfectly come back down to them. So I usually how many pips or like things do I usually do? I usually give it like just a little bit of breathing room. Like let's say your stop loss is here, right? Just give it a little bit extra, like literally something like that. Just give it a little extra room for price to have its pullback if it does have one. And then your draw on liquidity, like I said before, is the highest point that price on the 1 hour pulled up like so because this is the candle that broke outside of your range. So it's the top of that wick that candle closed, and we're having that on the second hour or on the third candle, you're having that pullback. Your target's that draw on liquidity, the top of that candle, and then boom, we hit it right here. In how many minutes is this? Kind of a long trade. This is 42 minutes. Usually my trades lasts like 15, 20. But like I said, it's still a scalp trade, still underneath an hour. So yeah, that's a trade that would have pulled or played out if price actually pulled back beneath your POI. So let's get rid of all these. I'll show you another live example on gold. For some reason, I was on silver. And actually, before we get into that, let me just look at what the, oh, this is something else. Holy shit, I'm on the 1 minute. Oh my God, I thought I was on the 1 hour. All right, there we go. This looks pretty gross. Obviously, if a candle is this massive like this, breaking outside of your range here, obviously, if when you have this massive of a candle, most likely price is either going to stall here and start pulling back, or it's just going to continue higher. It's not going to give you a wick all the way down into what your PO, because these would be your only POIs, right? Because this candle right here broke outside of this range. So your only POI would be this one right here. This one right here would not count because, like I said before, this candle right here already wicked past it. So this would not count. So this is your only POI, and obviously this candle isn't gonna wick all the way down here and give you an entry, you know what I mean? So gold I'm not interested in right now. Silver, not really breaking outside of any range. We're still inside this one right here. Still inside this range. Haven't broken out of it. Let's look at the 1 hour. 1 hour, this would be your range right here. Right here. This would be your range right here. Price never broke below it. If this candle right here broke outside of this range, then this candle right here, we would have been able to take a sell if we had the candle or this one close outside, the next one like this, pull back into this range and give us a sell opportunity. So we're not interested in that. Not interested in this because this candle right here would be your range and nothing closed outside of it. So we had no candle close or this candle right here didn't close above or below. Let's look at ES. Same thing on ES. Let's look at the 4 hour now. Same with the 4 hour. As you can see, this is your range. And you're looking, and when I mean by range, it's the most current price action. Like if you look at this, there's this candle here. Price broke out of it. So this would be your no range right here. This candle never broke outside of it until right here. So now this one right here, this is your new range. And now you're just kind of waiting for price to either break out of this range up or down. So yeah, we have zero entries. And like I said before, if we're looking on ranges on, it doesn't matter what time frame you want to look on, but if you're looking at ranges on the 1 hour, which if let me rewrite this for you guys just to embed it into your head. If you're trading on the 1 hour for, more of a quicker scalp, 1 hour, CCT, you look for entries on the 1 minute. If you're looking at ranges on the 4 hour, you just pick one. You don't have to look at all of them. If you're looking at 4 hour ranges, 4 hour candles, for prices to break beyond their ranges, then you're looking for entries on the 5 minute. And if you're looking at the daily, then you're looking for entries on the 15 minute. And then you can trade. Usually, I've never done anything with the weekly, but it's the same thing. Weekly is just the 1 hour. If you're looking at ranges on the weekly, which if you're trading futures, there's usually never, anything like that because look at this shit. Not really that clean on the weekly. Now let's get into a deeper understanding of this and what a top-down analysis is. That sounded weird, but we'll get into a top-down analysis. And I like to start on the monthly, and I look at this just once a month. If we're looking at the monthly candles, look at it once a month, the start of the month. If you're looking at the weekly, you look at the weekly once, the start of the week. Daily, look at it once, the start of a new day. That's it. And you just see what way prices are breaking beyond. So look at this. You have this range here. This candles are just breaking higher on the monthly. We still and we're this would be the range that you're still in right here. But as you can see, prices are just or candles are just breaking higher and higher. We're kind of having a little pullback right here, but we're still inside this range, so we're still bullish on the monthly. We're not bearish yet on the monthly until we have a candle close below a bullish range. So until that happens, we're bullish. We go on to the weekly, can get rid of this. We are inside, technically, because this weekly candle hasn't closed out of it yet. We are still in a bullish weekly range right here. We're inside of a bullish weekly range. I know we're outside of it right now, but we haven't closed outside of it. So until in 2 days and 19 hours, if this closes out of this range, now we are fully bearish on the weekly. Daily, you go on the daily, price is bearish. We just had this candle right here close, which there's kind of a gap in the market right now, but candles on the daily are closing lower. This one right here closed beyond this range here, and then we kind of just stayed inside this candle's range, which I'll mark out. We stayed inside this candle's range until we just broke out of it yesterday. So now, if you're trading the daily time frame, now you have POIs. You have this POI here. I don't know why I did that. You have this daily POI here that price can pull back into. You have this POI here. Well, actually, this one count this one count only because we have a gap in the market. So this closed past these two ranges. So really all you'd want to see is this right here. You have this untested wick right here. This is a POI or a candle that this candle right here closed beyond. You have this one right here, which basically lines up. We zoom in, which I'll still mark it because there is still a little bit of space in between them. And like I said before, none of these wicks would count because look at you move this to the side, this hits this candle here. And then look at this. Oh yeah, this would be another one here. Look at that. This candle closed beyond this one right here too. Price didn't close all the way down here, so obviously this wouldn't count. It's only wicks that haven't been tapped into yet until the candle closes through them. Like I said, I'm going to repeat myself a million fucking times because this is very easy. It's just very easy to grasp and get a hold of, and people really need to understand this so they know how just genuinely how the market moves. So honestly, we could take a daily, actually kind of want to put these back. Because look at this. If we go on to the 15 minute here, we have all these POIs. Like I said, the daily you trade only entries on the 15 minute. So daily candle closed. Where was it? Right here. Daily candle closed right here, or right here. We just had price pull back into it, and you would have already had your entry. Look at that. Price pull, and this is a daily and 15 minute. This isn't, you could pretend like it's a 1 hour and 1 minute, 4 hour and 5 minute. You're looking for the exact same thing on whatever time frame you want to trade. It's just whatever time frame you want to trade, you want to make sure that the higher time frame CCTs and candles are closing in the direction of where you want the market to go. So let's look at this. Like I said before, look at we have a fair value gap in the market. I'll zoom in so you guys can see better. We have a gap right here that was created. Boom. Gap was created right here, and we just broke through it with this candle here. Boom. This is your entry. Stop would be like I said, like above this point, you just give yourself a little bit of breathing. I need to turn this back on so I can see better. So we're right here. This is your stop. You want it just a little bit above. Give yourself some breathing room. And that daily candle that closed beyond our range, this would be your draw on liquidity. The bottom of where that candle pulled into, just the very bottom, the deepest point, that wick, bottom of that wick. That's your draw on liquidity. So this trade is not looking too good, but I'm just giving you an example because if you guys aren't familiar, but you do take losses in trading, it's inevitable. There is no strategy in the world that will 100% play out. Never, like it's not a thing that doesn't happen. But this is your draw on liquidity. Take profit would go here. I can honestly take this trade. Honestly, I might take this trade with you guys, or I might just take. I might because I haven't done a day trade is what we'll call it. Day trade in a really long time. So if we're looking at ES, this candle right here closed beyond this point here. This one wouldn't count because it hits into this one. This one wouldn't count because it hits into this one. Now, let me see if I'm being a good teacher. Would this one count, guys? You guys got to answer me on this. Would this one count? Would this wick here, if we dragged it to the left, would this count as a POI for price to tap into? Okay, we got one yes. Who's the other person in here? Got it. All right. I feel like Mission's asleep right now. Shoot, didn't you say it was gonna be like 5 in the morning for you, man? He might be asleep. I wouldn't blame him. I'm pretty sure he said it's 5 in the fucking morning for him. But anyway, you were right. This would count because it doesn't, this would be the candle it closed beyond and nothing is blocking it. So now let me ask you now, would this one count right here? Would this POI right here count? Yep, you got it right. Nope, that one does not count. Would this one count? Yep. Sweet. I'm doing a good job at teaching. All right. So now, since this is the daily, we go down to the 15 minute and price, forgot to kind of draw these out. Oh my goodness. Oh my goodness. Hold on. So now on the 15 minute, we can wait for price on ES to pull back on the 15 minute and give us an entry. On NQ, we already did have an entry, but this is why I like to look at both of these, NQ and ES especially. Silver and gold don't matter, but ES and NQ are very heavily correlated, but sometimes they'll show you different stuff. So like I said, like on the daily, this one, the candle that so this one closed beyond all these ranges. Now the next daily candle is pulling back into them, but look at fine, it pulled back into this one right here. But if we look on ES, we haven't pulled back into any POIs yet. I don't know why it keeps bringing up that ruler. We haven't pulled back into any POIs yet. So I would wait for ES to pull back into a POI as well as this one to keep pulling back into either this POI or whatever. I want to see both of them look the same. I want to see this one in a POI, this one into a POI, and give me an entry. Just one of them has to be in, both of them have to be in a POI, and one of them has to give me an entry back below one of the POIs. If this one's still above a POI, like let's say this one's up here, but this one's giving you an entry right here. I'm still gonna take that sell just because this one also pulled they're both into POIs, bearish POIs. So let's look at gold again. Shoot, um I might have to turn my trading plan. I thought for some reason I could get this all done in 2 hours, but I might have to do a second day and then do psychology and risk management on Thursday and Friday and have a second day for me breaking down more of my strategy and how I look at the markets for 2 days, and then risk management will be one and psychology and the last few things I have left to go over on Friday. So this might be a 5 day boot camp, is what I'm trying to say here. Maybe. Because I don't think I'm going to be able, because I do have to get off here at 10 and that's in 40 minutes. So might have to just turn this into a 2 day type of learning thing for the strategy only. Um, Now let's look at 1 hour. That was the daily 15 minute. Let me go on like a bullish 1 hour CCT. Okay, right here. Perfect. Just pretend like you don't see any of these blue boxes because I think I'm really going to go over that tomorrow just because I really want to focus on this today so you can start seeing this. See, just CCTs, candle ranges. I want, because this is the most important part and it's the most simple. A lot of strategies out there, if you know, like TJR, his shit is so fucking confusing and annoying to watch. I know how he trades, but it's very confusing, and I can see why a lot of people lose using a strategy. But as you can see right here, which actually, I'll just do this. So, see how this candle right here, let me get rid of the little line thing again, or get the arrow back. See how this candle right here closed beyond all of these ranges? So this is there, you got a fuckload of POIs here. You got a lot. You got one, because this candle closed beyond this one. You have two, which I actually took this trade. This is one of my winning trades I took a few, like, what was this? Friday, November. Oh, yeah, this was a few months ago. But yeah, I remember taking this trade because I was like, holy shit, we have a lot of POIs for price to pull back into. right here. All right. Now let me ask you this. Would this POI right here count? Nope. Sweet. This is very important. You got to know what untested wicks and ranges are. Would this one count right here? Yep. Okay, sweet. It seems like you got this down like really fucking good. I'm happy about this. So we got this one here. Fucking a lot of POIs. We got this one here. And we got this one here. So this candle closed beyond all these ranges right here. And let me, oh my God. I have to pull them out, all these out a little bit, a little bit more. Jesus. All right. Now, would it would which one of these would count? Fucking sweet. Yeah, none. Fucking great. All right. So now, since this is the 1 hour, what time frame do we take entries on? Oh wait, no, fuck. This is the 4 hour, sorry. This 4 hour candle closed beyond all these ranges. So what time frame do we take a trade on? Or what take an entry? Let's see. 5 minute. Fucking perfect. Let's go down to the 5 minute. Fucking find this somewhere. Oh my God, can I really not shrink this down anymore? Okay, here we go. Boom. So we're on the 5 minute. And look at that. We had the singular candle wick into all of these ranges within 5 minutes. So if we zoom in a bit, this candle right here, if you look, just you can zoom in. This candle's still closed on and a little bit below this POI. So this would still count. And now there's no fair value gap, but we wait for this range to be broken out of. Since this one didn't close in our POI, this one didn't close in the POI and this one, but this one didn't. This one did. So you would wait for price to close beyond this range right here. So if a candle opened up, here and kept breaking lower, then obviously this one or this candle, if you can pretend like this is that, if this was a candle that closed below the range, now this, you just move this, this would be your new range you want to see price to get broken out of. You want to see those candle ranges getting flipped. So we're on the 5 minute. It's really like the same. It's not the same thing as CCT, but you're wanting to see candle range flips. You just want to see a candle pull back into your POI. That candle that pulled back into your POI, you mark that as a range. The second it gets broken out of, that's your entry. So that candle, this one right here, broke outside of your range. Obviously, this candle right here was some bullshit news event. So your stop wouldn't go all the way down here. You would just put the stop below these lows right here that were created. And just give yourself a little bit of breathing room. And then you're targeting that high, that 4 hour high that 4 hour that so this is the range or not, this is the candle that broke outside of that range, and the high that that candle created, like I said before, is your draw on liquidity. So boom, this would be your trade right here, and look at that, within 5, 10, 15 minutes, price perfectly hits your take profit. That was a 4 hour and 5 minutes. Like I said, it doesn't matter what, it's whatever time frame you feel like trading. I personally trade the 1 hour and 1 minute and the 4 hour and 5 minute. That's it. I've never traded the daily and 15 minute, but if we get an entry on ES or NQ and it looks good, I'll fucking do it this one time if we can get an entry before this call ends. But I've never done it. Let me see that. Let me see what you said. Whichever one looks cleaner that day. Yeah. So that's what I'm saying. If you had, let's say, now let me find another example here. Because this happens a lot of the time. So let's say right here, um, that one doesn't look as clean. Trying to find a clean example to explain this really well because this happens a lot. Oh wait, the same trade I literally just took today. I'll just break that down quick. So if the 4 hour looks choppy and the 1 hour looks look clean, you trade the 1 hour, right? Or vice versa. Um, no. The only reason I say that is because if it's a choppy market, I would just not be in it. And most of the time, if the 4 hour looks choppy than the 1 hour, since it's a smaller time frame and there's more candles, the 1 hour is gonna look fucked. It's gonna look really fucking choppy if the 4 hour does. So if the 1 hour's choppy, but the 4 hour looks clean, just go with the 4 hour. But I'll break down like the thing you just asked. So, um, right here, I started trading right here. This 4 hour candle at 9 a.m. when I traded with everybody this morning, this candle right here broke beyond this candle's range, right? So this would be your POI. And obviously, if you look to the left, there's no other fucking candles over here. So you have no other POI, just one POI. You have this one right here. Let's go down to the 1 hour just to see if there's CCTs on the 1 hour, which there was. Um, so this was the 4 hour. And I was trading right here, right here. Because I saw this happen, and then this candle right here at 11 closed beyond this range right here. So now we have a 1 hour POI and a 4 hour. Oh, change interval. Why is it not letting me text? Settings? Oh, I don't know why it's making me do that. 4 hour POI. So now you have a 4 hour POI, and now this candle right here, or I mean this one right here, closed beyond this candle's range here. So now this candle opens up, or now you have a 1 hour POI because this one closed beyond this 1 hour candle, and you have a 4 hour POI because the candle at 9 a.m. closed. Let me go back to it. Like this one right here closed beyond this range here. So this is your POI. Go down to the 1 minute. I mean the 1 hour. This candle closed beyond this one. So now you have a 1 hour POI. So now you can just watch the 5 minute. Could have taken a trade right here. Boom. Boom. Oh yeah, I can't look at that anymore. Where was it? Okay, my bad. I was just looking at something. So there's literally two entries here. Doesn't matter which one you take. If you have a 4 hour bullish PO, 4 hour CCT and a 1 hour CCT, and both of them are in your direction, it literally does not matter which one you take. And I'll show you why. I'll just drag these over. As you can see, we had this run right here, which I believe which candle was this? It closed right here. This candle closed beyond this point right here, and it closed here. We had price pull back into our 1 hour POI because this is the 1 hour candle and the 4 hour because they're both the same. There's a 1 hour and a 4 hour candle. We had price pull back on the 1 minute because this is our 1 hour POI, 1 hour POI. So we're looking at the 1 minute. Pulled back into our POI. Look at this. Created a massive gap, and this is our other type of entry. And if you have, let me explain this too, because there's two entries. Bearish fair value, a bearish inverse fair value gap, or a bullish inverse fair value gap. So we create a bearish fair value gap, and it turns into an inverse fair value gap because the price just completely broke through this gap. It didn't pull up, and it didn't respect it. It just broke right through it. So now, if we look at this, because it's from this wick right here, and the gap is from this to this wick to this wick, and then you have this gap here. So technically, this candle right here broke beyond the fair value gap and inversed it right here. So you're drawing liquidity, like I said before, it's the high of that candle that broke beyond the range. So this right here is your drawing liquidity. And as you can already see, price already perfectly hit this. And this was today's trade that I completely missed out on. But as you can see, there's a fair value gap that gets inversed here along with a candle range. This candle range right here was the last candle that pulled back into your POI. So if you want the strongest outcome of your if you want the strongest outcome and probability in your trade, you can wait for the price to invert that gap and flip that candle range, which it ended up breaking out right here. Broke above that candle range here, inverse that gap, above this candle range that price was staying in. So your stop would go below there, give it that little bit of room, and then you're targeting that draw on liquidity. And oh, my bad. Let me move this back. And look at that. Take profit gets hit within from 12:57. So 22 minutes. Take profit gets hit. And then there's two entries. We have a 4 hour. We have the 4 hour POI that hasn't been tapped into. This 1 minute only tapped into this 1 hour POI. We didn't come into that 4 hour POI until right here after this trade already played out. So now we go down to the 5 minute. And look at this. Go down to the 5 minute. Price pulls back into the POI, closes below. This was the first candle right here that closed onto your POI, closed beneath it. So we're inside of this range, and the second we break out of it is your entry. So we stayed inside of this range until right here, finally broke out right here. This would be your entry. And when price is kind of this, or let me see if this is even a 1-to-1. Because like I said, this would be your draw on liquidity, that highest point. Draw on liquidity is right here. So yeah, I would just target usually when price is like this, usually I either just won't trade. I just won't trade at all, which is completely fine. You can miss out on a trade because if it's not fitting with the strategy, don't fucking trade it. But sometimes if I'm feeling a bit risky, what I'll do is I'll enter this trade, but I'll just target a 1-to-1 like this. Because price already hit that draw on liquidity right here. And if price moved, this actually would have been a break even trade for me because, like I said before, if price moves 50% into my take profit, I always set my stop to break even. So as you can see right here, this is like 50%, and then this is the full take profit. This would have stopped me out at break even because I would have already put my stop to break even after price moves 50%. But if you would have held it, you would have hit that full draw on liquidity. And that's what I did. If you saw my Telegram, that's what I did twice today. I entered, price moved 50% into profit, took me out at break even, went in my favor. Happens a lot. But guess what? You're saving yourself from a potential loss. Not putting risk in the market, and that's one of the most key things in trading is not putting yourself at risk. Oh shit. Sorry, I'll read your comment in just a. You said extra confluence, so it's better to break even than to risk it. Yeah, yeah. A lot of traders out there will tell you that don't mess with your take profit or your stop loss. Why the fuck not? Why if a trade, let's say right here, we have a trade, like just pretend like price pulled into our POI, we have an entry and we're about to enter the market. If price already moved 50%, like this high into your profit, there's no reason you should take a loss because this could just completely go like this and stop you out. And if you already were in profit this much, there's no reason you should be taking a loss. Just set it to break even. If you hit your take profit, amazing. If you get stopped at break even, cool. You potentially saved yourself from a loss, and you're not missing out on anything. There's always trades to take the next day. I know social media makes it a little bit hard. You see people, they're like made 20, 30 billion dollars today. Why didn't you? It's just social media crap. Um, Let me see what else I should probably go through today. So I went through all this stuff right here. Sorry, I'm just looking at like my thing here. I guess since you're a beginner, I will go through a few more little things, like where how you can like see when buyers and sellers are stronger in the market. So let me do a quick little breakdown with a candle. So let's say this candle right here, let's say there's just a massive wick like this. Let's say price is coming down like this. This is not going into this strategy. This is just a little breakdown, and it's like a tiny extra confluence, which it's just long and short wicks of candles. Long and short wicks of candles mean either two things. Buyers are overcoming sellers, sellers are overcoming buyers. It's just an extra, I don't base this into my strategy at all. because as you can see, price can create little wicks like this, but still reverse. So I'm just saying this though. If you're watching, let's say price is just breaking lower and lower, and a candle pushes all like this candle right here, pushes all the way down here, but then pulls back up and closes like this with a massive wick. That's kind of signaling that buyers are starting to overcome sellers that are pushing down the market, meaning buyer or sellers pushed this price all the way down here, and then buyers took that price all the way back up and made the candle close here. So what that means about, I would say 65% of the time is either candles will start creating longer wicks, but closing like this, meaning price is about to stop and head the opposite direction. And a little key thing I wanted you to look kind of look up if you want, if you have time some point of the day. Um, it's just a very basic understanding of candles. Candlestick um cheat sheet. I would just look up candlestick cheat sheet and study these right here. Fuck the names. You don't have to fucking remember all these names. Just know that if candles are pulling up, like let's say buyers are pushing the market up, a candle like this stops, makes a big wick, closes like this, most likely going to price is going to reverse. So if you want, you can look at, I don't know what the fuck a cup and handle is, so don't pay attention to that. Double top is pretty good. Double bottom's pretty good. These are pretty strong. The wedge and the flag, don't know what the fuck that is. Could care less. A falling window, these don't fucking matter. It's really just these. Candles with wicks. You don't need to know what any of this shit is besides double top, double bottom. Nothing else matters besides the candles with big wicks. That's literally it. And this one right here. If you see a candle with a really long wick on one side and a really long wick on the other and closes small like this, basically just means there's indecision in the market. Price doesn't know where it wants to go. Buyers are selling, buyers and sellers are competing and keeping price in the same. Like, look at this. Look at this right here. See how this candle has a big wick to the top, big wick to the bottom, and closed like this? It just means buyers and sellers don't know where the price is going, and it can either go higher or go lower. Just really a 50-50 type of candle thing. I kind of want to try like to find like a double bottom example in the market for like an entry. It basically like let's say you're in a CCT, right? I'll just break this down. Or no, I want to find a real example. I want to find a real example. Where is it? Okay, right here. So this candle right here closed beyond this range right here and this range right here. So you have two POIs that this candle closed beyond. So now we go on to the 1 minute since we're on the 1 hour. Keep getting lost on where I am. So this candle, where did we close? Can make these look perfect. Oh, boom. So where did we close? It was right. It wasn't here. No. Sorry, I'm kind of mistaking myself right now. What the fuck? I got lost. But hold on, I'm going to show you just this kind of chart pattern because usually it creates it every single time. And it's kind of one of like a not like a confluence in my checklist, but when I see it, I like to see it. That's all I'm saying. I just like to see it. So this is the 11 a.m. candle. Or no, at 10 a.m. and it closed at 11. And then now this is the 11 a.m. that closed it. Okay. So now I know where price is and where to look. So right here. Or wait, why does this look so weird? 10 a.m. and then it closes right here at 10:59. Oh my God, I'm so blind. Yeah, it's this right here. Okay. Oh, literally, look, I did not plan this at all. So you see it. Let's go back. You see this little chart pattern right here, this double bottom, this right here. I did not plan this. Look it. We have that 1 hour CCT, the candle closed beyond the range, waiting for it to pull back into our POI. And look it created a price, pulled back, created this double bottom pattern, and then hit our draw on liquidity. Like I'm not a wizard, but let me tell you, dude, that shit happens a lot. A lot of people like, and right here, look at, we also have this gap in the market. We didn't invert this gap until this double bottom shit was created. Fucking close beyond it. You can see right here. So there's your entry. Or sometimes, which I don't really do too much, but if you want a safer entry, there's this candle range that pulled into our POI, closed on our POI. So you could wait for price to break above this range and just, you would enter here instead and you would get a not really that good of a risk to reward because this is where your stop loss would be take price. So that's not really a good risk to reward. But if you get the inverse fair, you can really just choose. If you feel like waiting, you can. Price inverted this gap here. Stop below this point here, the furthest point where price pulled back into, or when the candle closed, wicked this far down, stops there, a little bit of wiggle room, POI here, draw on or PO not POI, draw on liquidity, sorry. Draw on liquidity here, and boom, we just chopped around and we finally hit it right here. Even if you set your look at even when because like I said before, price right here traded 50% into our take profit. So 50% is what I mean by 50% obviously is just half of that rain or half of that take profit. So we traded halfway into it right here, would have set my stop to break even. And look at that. Never even pulled back into our stop loss, stopping us out at break even, just hit full draw on liquidity. But like I said, this happens a lot. Like this happens for some reason, just a lot of the time. Don't know why. Let's see the chat. So the IFVG is yes, IFVG is always going to be stronger, but both of them combined are even more stronger. Like a candle range flip, let's say this is your candle range that tapped into that POI. Price can break out of it and it can hit your like I said, this trade played out, can hit your draw on liquidity and boom, you profited. But the fair value gap or the inverse fair value gap, like this, price created this gap, inversed it. This will be stronger, but the thing that's most strong is comparing the both. Like having this range right here and this gap together. You can wait for price to invert that gap and break above that range, and that is your like most strongest entry signal. All right. I went over daily, weekly, monthly candle ranges. I went through time frame correlation, which is having the weekly, monthly, or the monthly, weekly, daily, 4 hour, 1 hour those candle ranges being in the same closing in the same direction, not having any opposition, which just means like let's say you have the weekly closing out of a range lower, the monthly is closing lower, the daily is closing higher, and the 4 hour is closing higher, and the 1 hour is closing lower. You would most likely just want to go with the higher time frame. If you have the weekly and monthly closing lower, just go in that direction. Look, wait for CCTs, 4 hour CCTs to start going lower and going with the trend of that higher time frame. Even if you get a buy opportunity, it can play out great, but I would rather be trading in the trend of that higher time frame. But obviously, since futures are futures like ES, uh, NQ, gold, and silver, most of the time on the weekly and monthly, candle ranges are always going to be breaking higher and going higher, going higher. Like there's very rarely, even if there is a pullback, like I don't know why it looks like this, but even if there is a pullback, it's very short-lived. Like this was all the way back in 2022. This was 4 years ago, was our biggest pullback in the market. Like look at this. From here down to here, it was having a pullback for almost a whole year. Ever since that pullback, we have not had a single significant pullback like that in a whole entire 4 years. So I wouldn't be worrying about any type of significant pullback until you see a weekly or monthly can like this right here. Look at it. We had this pullback, very short-lived. We had this pullback here, this candle right. I don't know why it's bringing up all that. Let me zoom in. We had this candle right here close beyond this range here, and it didn't even respect it. Price just continued higher. So if we go on to the daily, you can start to see this candle right here close beyond all these ranges, but then this one closed beyond this range right here, and there's just candles started closing higher. And if you go on the monthly, candles are breaking higher. So you only have one range or one time frame opposing all your other time frames. The monthly closing higher, on the weekly right here, you had one closing lower. Daily ones are closing higher. Obviously, if you go on the 4 hour, they're closing higher. I feel like that's what confuses me more, which way to take the trade. Yeah, so it's literally just watching what candles are closing, and you want more in your direction than less. And you want to do it with that higher time frame. So like today, monthly candles closing higher because I looked at this on January 1st, just saw this candle right here close beyond this range here. So this is your new one. This was December and it closed beyond this one. So candle ranges on the monthly closing higher, candle ranges on the weekly slowly closing higher, daily having a tiny bit of a pullback, but as you can see, we're still inside this candle's range. So we're still bullish, but candles are closing higher right here. And it's the most recent candle like the most recent price action and the most recent break. So we didn't have price break out of this range here until right now or until yesterday. And then you go down to the 4 hour, wait for candle ranges to start closing higher. We started closing higher this morning, so I took a buy somewhere in here, just got stopped out at break even. Wait for candles on the 1 hour if you're wanting to take a 1 hour CCT. Just wait for them to give you give you an opportunity. Like right here, this candle closed beyond this range. So there's a 1 hour CCT right here. 4 hour opportunity. There's a multiple. I mean, this was one in the morning. I wasn't awake, but there's this one right here. This candle closed beyond this range here, so there's a buy opportunity here. Like and then yeah, you go to the daily. Obviously, yesterday's candle closed like this. So you don't want to sell. If this daily candle closed like this, you don't want to be on the 4 hour and 1 hour looking for sells like a lot of stupid people will be doing. A lot of people will be trying to catch just some massive sell off in the market. You know what I mean? Trying to catch this whole entire move down when candle ranges are closing higher. Like we just had this one, like I said, close higher here. So on the 4 hour and 1 hour, you don't want to be looking for sells if the daily, the weekly, and the monthly are all closing higher. Does that make sense? Let me see, let me see, let me see. Yeah. Oh, you said yeah with an A. So does that mean are you sure? It's making sense. Okay. I just want to make sure because it is important. That's why I have these little candles here to show me. It's very helpful because this is the 1 hour time frame. This is the 4 hour and the daily. So I don't have to be like switching through different time frames. I can just look to see, like I'll look at the weekly at the start of the week, so on Monday or Sunday night when the market opens for the new week, I'll just look and be like, okay, this candle closed higher than this one. So I'll be looking for buys. And then the start of the month, you only look at it once a month, January 1st, already looked at it. This candle right here in December closed beyond this one. So I'll be looking for buys this month. Go to the daily. All right. Daily closed beyond all this right here. So I'll be looking for buys on my 4 hour CCTs or my 1 hour CCTs. Because that's the only time frames I enter on, or the only time frames I look for CCTs are the 4 hour and 1 hour entries on the 1 minute and the 5 minute. So is it starting to make just like a little bit more sense? Just how you look at the monthly at the very start of the month. Just look at what, like I would write this down. You look at the monthly candle, see which way it closed. If it closed beyond a range, if it closed above, or if it just closed higher than last month, then you go to the weekly. Look at the start of the week, so on a Monday or a Sunday night when the market is opening, look which way that previous weekly candle closed. If it closed up or down, go to the daily. Once a day, you just look at this. That's why I have this here on my chart, is because I like to look at these daily candles to see which way throughout the week they're closing. If they're closing higher, which as you see on here, they're not closing lower. They're big bullish candles. So then when I go to trade on the 4 hour and the 1 hour and look for my entries on the 1 minute and 5 minute, I'm looking to see if 1 hour candles, I wait to see if 1 hour candles are closing with the direction of the daily, weekly, and monthly, and if the 4 hour candles are also closing in the direction of the four or the daily, weekly, and monthly. So what is an yeah, so I already went through the IFVG compared to a fair value gap. So a fair value gap, like let's say this right here. I just want to break this down too, because there's a big gap on the 1 hour, right? Big gap on the 1 hour. Um, this is just a regular fair value gap. This is not an inverse fair value gap until price completely breaks underneath this gap. Like I hope that makes sense. It's not inverted until price breaks below. If it's bullish below, then it's in or then it's in wow. Then it's an inverse fair value gap. And then if it's bearish, let's find a bearish example. There's not really that many. All right, found one right here. So we have a bearish fair value gap right here, this gap in the market. This is not an inverse fair value gap until price breaks above that. So this is a bearish fair value gap, and then it gets inverted, and then this is a bullish fair value gap, and we wait for that to get inverted. And then I already went through that for like entries, like if we're taking a buy, we're waiting for a bearish fair value gap to be inverted to take a buy once price breaks back above our POI. And then if we're bearish on the day, then we're waiting for price to invert a fair value gap, or invert a bullish fair value gap to the downside. Like if price is pulling back into our POI, we're waiting for that fair value gap to get inverted, and then we enter after it breaks below a POI, inverts that gap, and then there we go. Let me see your chats, my bad. Yeah, thank you so much. Made a lot of sense. So if it's inverted until a candle closes above it, yeah, so that it's either above it, if you want to write this down. So this fair value gap in the market is not inverted until, because this remains a bullish fair value gap, meaning price could just pull back into here and keep continuing higher. So this is not an inverse fair value gap until price breaks out of this gap and below it. And then same for bearish. This remains just a regular bearish fair value gap because price could have just pulled into here and continue lower. This is not a bearish or an inverse fair value gap until price breaks above it. Oh, shit. So does that make sense? There's no, there's no such that there's only, let me write this down in text for you. So there's only such things as bullish fair value gap and bearish fair value gap. There's no such thing as bearish inverse fair value gap or bullish inverse fair value gap. All there is fair value gaps, and then there's something called an inverse fair value gap, which just means that one of these got flipped. So this is just a bullish, since prices are breaking higher, created a bullish gap in the market. Price remains bullish until it breaks, and then it becomes an inverse fair value gap. Fair value gap, the bullish fair value gap gets inverted, turning it into an inverse fair value gap. And then same for this. Just this remains a bear since price is, you know, going lower. This remains a bearish fair value gap until price breaks above it because it could just pull back into this, respect it, and head down. This is only a bearish fair value gap until price inverts it, turning it into an inverse fair value gap. Does that make sense? Because I see a lot of people teaching fair value gaps, and they're like, yeah, this is a bullish inverse fair value gap or bearish inverse fair. That's not a thing. There's only fair value gaps in certain directions, and then there's only inverse fair value gaps, and it's when those gaps get inverted, meaning they completely get disrespected, which I already showed. Like it can respect to your go up, and then that means it's just a respected bullish fair value gap. Until this fair value gap gets broken out of, now it's an inverse fair value gap to the downside. Sweet, sweet, sweet. So now I can mark that off there. What is a fair value gap? What are we? Okay, I might go through this tomorrow. Okay, what is a draw on liquidity? I already went through that. You know what a draw on liquidity, right? It's just the price. It's a price magnet. It's where you want to see your take profit get hit. So you got that down? Yes. Sweet. Price are you? So yeah, I think we went through about um so yeah, we don't I mean we still have half of this list to get through. So there is gonna be a day two on just trading only. So yeah, this boot camp is gonna be a 5 day boot camp now. Because I was only able to get through half of this. So which is only the CCT part. Yeah, yeah, exactly. A lot of people I see a lot of people out there just getting in super early. They'll just wait for that price to pull back into your POI and they'll see it just break above, not even inversing a fair value gap or breaking out of a certain price range. Meaning, like, I'll do a little test on you. Imagine these are candles pulling back into your POI, right? Would you enter, um, hold on, sorry, I kind of, okay. So imagine these two candles, like let's say you have a POI right here. Would you enter here? I have never used a Fibonacci thingy in my life. Yeah, I've never used it. You can if you want, if you know how to use them, you can use it. But no, I have literally never used it. It's never helped me. So, but would you enter right here? So these are candles pulling back into your POI. We had one break below it, and now this one broke back above your POI, but would you enter this trade? Would you buy here, have your stop and then take profit on draw? No. Now, would you enter here? Yep, because this is the price range. This candle pulled back into your POI, so you're wanting to wait for this price range right here to be broken out of. And I see a lot of people seeing stuff like this, like they'll have candles like this. Price finally pulled back into their POI, broke back above, and they'll enter just right away like this. Next candle will open up and just stop them out. You want to wait for that either that candle range to be flipped or see an inverse fair value gap be created. You can just do a very fucking quick example. You just want to see, even if it's like up here. Let's say you have an inverse fair value gap right here, right? Let's just say there's an inverse fair value gap. You have your wick here and that wick for this candle here. Let's say you have your fair value gap. There's like a candle there with wicks, just imagine there's wicks. A lot of people, because if you have a fair value gap, like let's say, because as you can see right here, there is this price range, right? There's a price range here. So technically, if this candle breaks above this price range, you could enter this trade right here. But what you really want to wait for is this inverse fair value gap to play out? Because like I said, if price uh breaks back above your POI, breaks back above a range, but there's a fair value gap, like I said, a lot of the time these could get respected and price could just deliver lower. You want to wait for that fair value gap to get inversed, enter here instead, stop loss, and then, draw on liquidity wherever it is. So, and I think I don't want to, you know, put too much information honestly into your head. I have a little bit more. It's all starting to look more clear for me. Thank you. Yeah, of course. Of course, dude. So, I think this is enough information. Like I said, it's all recorded. So I will be uploading this on YouTube so you can rewatch it. And I think that's going to be it for tonight. I have a little bit more stuff on like higher time frame fair value gap or fair value gaps that I want to go through, and um what like some stuff like wick fills, waiting for daily, weekly, monthly wicks to be created, stuff like that. Just don't even think about what I just said. Well, you'll be learning that tomorrow. Just take whatever I taught you today, rewatch the recording. I'll upload it tonight, or get it uploaded and edited tonight. Um, and then we'll learn the rest of this stuff tomorrow. You'll learn just the very because we basically got through all of CCT and everything you need to know in this one call. So tomorrow there's literally a tiny bit left of CCT you need to learn, and then the rest of it is going to be how to use ICC, the indication correction and continuation, and how that plays in to our strategy, and how the higher time frame move in the market goes along with CCT. You'll learn all that stuff tomorrow. In a very in-depth version, you'll learn market sessions, highs and lows, and why there are significant draws on liquidity. Like, you learn all this stuff tomorrow. So this is going to be day one of the trading plan, and then tomorrow is going to be day two of the trading plan, and then we'll have Friday or Thursday be risk management, Friday, and then Friday be psychology, and some books I recommend you can get if you want. And then I have a little Easter egg type of thing at the very end that I'm going to go through. It's really just everything I taught you, and the most important thing or just the most important handful of stuff you really need to take. And that's really all you need to just be great at trading. But let me show meeting, share screen. I don't know how to stop sharing my screen. How do I do it? Shares fucking A, dude. I'll just put my shit right here. There we go. All right, whatever. Um, yeah, that's really about it. Oh wait, I don't know, just fucking whatever. I don't know how to. Oh wait, you had a chat here. Can you maybe do a session live so we can see how you identify things on the live market? It's really helpful to see the strategy being traded. Yeah, I literally trade this strategy. Damn, my cheeks are fucking red. Damn, I told you, I get fucking nervous, dude, doing these live things, dude. I'm getting, you know what I mean? I'm getting better at them, but still, I'm a little nervous doing them. But, um, yeah, no, I literally trade live with everybody every single day. Literally every single day, New York session, I trade my strategy every morning, and I post the trades I take in the Telegram. It's just the same thing. I start a live call. I can honestly record it a few if you want. I can record a few of the sessions and upload them on YouTube if you're not able to join the live call that me and some people trade. But yeah, um, yeah, the times I trade is really 9 or 10 a.m. Eastern Standard Time. So if you want to look up where you are, convert that into your time with Eastern Standard Time. I trade at 9 or 10 a.m. I just post the Zoom link, say let's take some trades, and then we all trade together. So I'll absolutely be doing that and doing a live, and I'll try, and there hasn't really been any session or setups lately during Asia session, which is what we're in right now, which I can show you with this indicator. Or I don't know if you can see my screen, but this indicator shows you like what sessions we're in. And right now we're in Asia set. I trade New York session mainly right here. So right now we are in Tokyo or Asia session. For some reason it says Tokyo, not Asia, but there's just not been really any setups in Asia. Obviously there kind of is one right now. Like this candle right here closed beyond this range right here. So technically, let me just shift this like that. Technically, we are in a range, and we just broke back above right here, closing outside of, or wait, I mean, this would be on the 1 minute, not the, right here. Technically, yeah, this is a trade setup right here, because this is the 1 hour. This 1 hour candle closed beyond this range here. We just had our pullback into that POI, which is this black line, pulled back into the POI right here. So now you're looking for entries. There is a entry right. I don't know why this thing's always in the way. There we go. There's like the draw on liquidity is really small. Like I said, the high of that candle right here is your draw on liquidities. So you would have either would have been a really risky trade. You could have entered right here or right here, but look at that. The trade literally is about to play out within fucking 4 minutes. Strategy I just taught you. Look at that. This candle closed beyond this range. This candle, the next hourly candle pulled back into it, broke back above, gave you a candle range flip. Oh yeah, right here. Right here. This is really your candle range. Right here. So yeah, you would have entered. We stayed inside of this range until we broke out of it right here. And this would have been your entry. You would have entered here. Stop would have been below here. Shitty ass risk to reward. So I wouldn't have obviously taken this trade, but like I said, they play out. Like this strategy does play out. Or maybe yeah, there we go. Hit full take profit, that draw on liquidity. You honestly could probably just target a 1-to-1 if you're really feeling the risk. But obviously, if you hit that, if you're in a trade like this to where your risk to reward looks really bad, because this is where it would have been, that's your draw, you would have had negative risk to reward. But if you want to be risky and do like a 1-to-1, the second like areas like this get hit, like this area here, this high right here, this gets hit, you can set your stop to break even here. Or since you already hit your draw on liquidity, you can wait for the draw on liquidity to be hit, and then you just set your stop to break even once that point gets hit. It's really up to you. And then you can just, try and target your 1-to-1. But like I said, it already hit that draw on liquidity, which was right here. So really price, since it already hit that draw on liquidity, that was the price magnet. Price magnet already got hit. So now price can just free fall from here if it really wants to. So it's risky to hold trades past its draw on liquidity. Yeah, that one just played out right in front of us. So that's pretty cool. Let me show meeting. There we go. But yeah, very high probability fucking trading strategy. I've been wanting to teach people how to do this shit for free because I hate people just seeing them waste money on courses. But I am a little bit past my time, so I'm gonna stop the recording